Hey everybody, I wanted to do another walkthrough tutorial video. Whenever I do these videos, people in the comments say, well, it's hindsight. You pulled up an old chart and you're bullshitting and saying, well, I bought it at the bottom and I sold it at the top, which I never do, but that's what people say anyway. So I wanted to make a video and I wanted to do a different thing. So usually what I do is I get a video, I film the video, I jump back and forth in real time and I show you the charts from 5 days ago. I had the idea the other day to take screenshots timestamped. You can see 6:29 at 9:52 in the morning. You can see it up there too. And do a different kind of walkthrough in real time to show you sort of what I look for when I'm about to make a trade in a company, and then ultimately everything that happens after I do make the trade. So this is Amiris. It's a stock that I've traded on and off throughout the years. It sold off pretty hard. I want to show you this as well. This is the 20-day chart. Now, this I just took literally just now. Whoops. But I wanted to show you what's happening here. The stock sells off from 251, hits this bottom 176 line, moves up, sells off, and look where it stops. So as I'm a trader looking at this stock, what I'm looking for is to see if it holds support down here. If it holds support, I'm going to buy. So now here we are after the sell-off. And this is on Wednesday the 29th at 9:52 in the morning. This big sell-off followed by this little bounce. A couple things could happen here. One, it could surge in volume. If it surges in volume, and you can see this is volume here, the blue, these little graphs down here, that's volume. If it's really strong volume and it continues to run, these are the 5-minute charts. You can see that right next to, well, you can see it right over here where it says 5 minutes. So each one of these candlesticks is 5 minutes. If we have a surge in volume and it just keeps running, I might make a scalp trade. I might hop in and hop out very quickly. The other thing I need to see is maybe it consolidates and maybe it moves kind of sideways. As long as it consolidates, I'm still kind of interested. On the other hand, the last thing it could be is a dead cat bounce where it pops and then sells off way lower. The only thing that seems really promising to me is this little oversold on the relative strength index. It's not a guarantee, it's just an indicator, but it's something I look at. But still, just because it's oversold doesn't mean that it can't become more oversold. So at 9:52 in the morning, we are still in wait and see period. Now, people always say, hey, why don't you trade in real time? We want to watch. Because this is at 9:52 in the morning. Market's open at 9:30. So it's been about 20 minutes of me just sitting and watching and looking. Pretty boring. Now we cut to 10:11 in the morning, and you can see that it sold back off, but it is now consolidating here. This is promising. I'm still not going to buy yet. I still need to see something happen. So one of the things I'm going to wait for is these Bollinger Bands to narrow. The more narrow they become, the more it increases the likelihood of a breakout. It can be to the upside or to the downside. Again, another thing, it's not a guarantee. It's just an indicator. That's why it's called. That's why they're called indicators and not guarantees. So I'm still not in. Now we jump to 11:40 in the morning on the same day, on the 29th. Oh no. And sure enough, this stock has now formed a support line right here at around $1.85. On top of that, the Bollinger Bands have narrowed, and it looks like we're moving in a positive direction. So at 6:29, on 6:29, same day, at 11, almost 40 in the morning, I buy in at $1.88 per share. Now, I have a couple options here. First option is, if we have really strong volume and this stock moves considerably, I might make it a day trade and be in and out in the same day. On the other hand, if the volume slows, but it kind of just hangs in this area, I'm fine with making it a couple day swing trade. And last but not least, if this stock drops to around 175 or lower, I'm cutting my losses. I'm taking around a 7-ish% loss. Because I've been trading for 11 years, I'm a little bit more comfortable with giving stock a little bit more room to breathe. So I don't always hold firm to my 7%. You do what you want with your money, especially if you're new. I would recommend really sticking to your plan just so you get into the habit of cutting your losses. But it's not something that that I do. Sometimes I'm more flexible. Sometimes I'll look at the chart and the volume and I'll go, I think maybe I'm going to give it a little bit more room. So now the day is basically over, and it is now time for the very next day, which would be what, Thursday? Yeah, Thursday the 30th. So now here we go, Thursday the 30th. And you can see this stock yesterday or the day before when I purchased it ran up to around 193. So I was in at 188. So profitable for a little, and then it sold off for a little. But remember, I said it needs to be around 175 for me to consider cutting my losses. And look at that. We get really close. And then what happens? We start to move back up. So lucky for me, I'm still in this trade. We are heading towards a little bit of a breakout. I'm still in this position. I'm not cutting my losses. And I took this next picture, I guess, at market close. Market closed at 4 o'clock. So you can see here, I took this photo at 4:22 on the same day. And look at that. We closed up from where I purchased it at 188. Now we're sitting at around 192 after hours. Now I want to show you this Fibonacci retracement. We're going to jump ahead a little bit, so spoiler alert. This was the most recent high. This is the most recent low. So you connect Fibonacci. If you want to learn how, I'll tag a video. These are all of my potential price targets for this stock. Remember, I'm going to sell it if it gets to 175 and I'm going to take my loss. But as long as it holds support on this line like it did back here a few weeks earlier or a week or two earlier ago, whatever, I'm fine to hold. In other words, I'm going to hold this stock as long as I have to until I'm profitable or happy with the profit, or it hits my exit price and I sell and I lose money. But either way, I'm covered. And I know now with these Fibonacci retracements, I can calculate out potential price targets. So I know generally what I could make on my trade. So it could get to 205, it could get to 214. Could it get to 251? Yeah, but it's a little less likely. And for someone who likes fast turnarounds, especially in these extremely volatile markets, I'm kind of more inclined to get in and out when I have a pretty decent profit. So here we are. Now we jump to the next day. It's July 1st, and the markets are almost closed. And you can see that the stock is bouncing all over the place, but it never gets to 175. Not only that, but we have multiple breakouts heading into the afternoon and into the close. We get up to 193. Remember, I'm in at 188 on this stock. And then it's the weekend, July 4th. Today, Tuesday, July 5th, is the first day of trading since the holiday weekend. And look at what happens to this stock. We have a breakout to the upside, and it surges up to around $2.10. Now, I took this picture just a few minutes ago, and you can see that it's even higher. It got up to $2.12. But I was in at 188. I was out at around 207. So that's around a 10% profit in 29, 30, 1st, 5th. 4 days, basically, give or take a little bit. Because I sold in the afternoon, I sold this morning, so around 4 days, 3.5 days, 10% on this trade, not bad. And remember, 175 is my cutoff. So if it drops to that level, I'm out. I'm covered. I know exactly what I stand to lose, and I have estimates along the way of where my potential price targets are. Now, if we were in a really strong bull market, I probably wouldn't have sold here. Reason being, we've crossed this yellow line, which is a 200-day moving average, so that's bullish. We have some pretty strong volume, and we're not yet overbought on the relative strength index, which means over time, might not happen in this day, in this particular day, but over the next couple of days, this stock could, in theory, potentially run a little bit higher. But markets are extremely volatile one day to the next. Nowadays, I don't really like that. 10% for me is fine. Remember, the goal isn't to make all the money, just some of it. So I've made my money. I'm happy with my 10% gain in 3.5 to 4 days. And that's your little walkthrough. So if you like this video, if you thought it was helpful, please subscribe, hit the bells, hit the notifications, hit all the buttons. Thanks for watching, and have a good day.